Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 30th of January 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 was up again, briefly touching 7,629.8 points, which is above the best closing high, but below the all-time intraday high of 7,632.8 points. By the close, the market was up 0.3% for the session. That means it ended at 7,600 points. Wall Street was strong overnight, with the S&P 500 hitting a new record level, and that set the tone for the local market. Technology stocks were among the best performers, as were real estate investment trusts and healthcare stocks. The Industrials Index was the worst. CSL, Fortescue Metals Group, Goodman Group, REA and WiseTech were among the best of the large caps. QBE, Suncorp and Brambles among the worst. In corporate news, Atlas Arteria rallied nearly 3% after it said toll revenue increased 6% in the December quarter, following price increases and strong traffic performance at the company's most profitable toll road asset. That's the APPR motorway in France. Copper miner Sandfire Resources rose 3.6% after it booked unaudited sales revenue of $217 million, according to its latest quarterly trading update. In cloud connectivity provider Megaport, well, its share price surged 28% after it said revenue increased 5% in its latest quarterly trading update. Story number 2, the Aussie dollar jumped 0.5% today. That's the biggest daily gain in 5 weeks. It's now trading back above 66 US cents. The Aussie has not done very much over recent months, so a 0.5 cent move is quite a thing. It's all about confidence that the Australian economy won't slow too much, alongside a growing bias towards risk assets among international investors. Now, the Aussie dollar, compared to the US dollar, is a risk asset. Tomorrow's CPI figures could well have a significant impact on the currency as well. Story number 3, Australia's largest fruit and vegetable company, Costa Group, is set to go private after shareholders voted in favour of a $1.5 billion buyout bid from a consortium led by United States private equity giant Payne Schwartz. More than 98% of eligible proxy votes cast prior to the scheme meeting today were in favour of the $3.20 per share offer, which values Costa's equity at about $1.5 billion. The Costa board in September agreed to a $100 million reduction to the original offer price of $1.6 billion from the consortium. Costa Chair Neil Chatfield told the meeting today that he was sympathetic to the criticism from retail shareholders that the price wasn't high enough, but the final offer of $3.20 a share was well within the valuation range from independent expert Kroll. Costa grows berries, mushrooms, citrus fruit, tomatoes and avocados. It operates 7,200 hectares of farmland in Australia. It's been listed on the ASX since 2015, operates in Morocco and China as well. Well, it's going to delist from the ASX on February 8. Story number 4, Indonesian miner Nickel Industries has upped its dividend and introduced a $151 million share buyback, sending its share price up nearly 30% today at a time when Australian-based producers are struggling. Nickel Industries, the biggest pure-play nickel producer listed on the ASX, announced record production and earnings from its Indonesian mines and nickel processing assets in the December quarter. Its quarterly report also talked up its green credentials and safety record, something local producers have complained about Indonesian nickel. Some Aussie nickel miners are hoping they can attract a green premium. In fact, nickel prices have tumbled over the past year, and local producers, Resources Minister Madeleine King, unions and the Western Australian government held a crisis meeting in Perth last week. Ms King raised the prospect of government support for the sector. More than 1,000 job losses have already been announced in Western Australia since the start of December. More are likely, but Nickel Industries is doing okay. And story number 5, retailer City Chic has confirmed a media report that offshore buyers have been circling the company's North American business. The women's specialty plus-size fashion retailer fielded several informal approaches for its North American business. It said that sent its share price up more than 20% today. The retailer has had a hard time of it recently after trading at more than $6.50 a share in October 2021. It's fallen as low as 25 cents a share last November. Today it closed at 54 cents a share. That's it for the afternoon report for Tuesday, the 30th of January 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.